Money Block, and I am a proud contributor here at MarketStream.live. With your opening bell, let's see what's hot on the open this morning. Well, I don't know, folks, if you're new to watching this show or if you're just entering the markets, you probably didn't realize we've been in a range for basically the last 3-4 months, since July. Take a look at the action this week. We're opening up the market right now. S&Ps are up off their best levels. They're just up about 9 points, and we're seeing that 1250 mark being challenged. But what's interesting is if you look at the action this week, you had Wednesday down, Tuesday down, and Monday up. Basically, if you take all of that action up until this morning's up day, the S&Ps before the open were up basically about 0.1%. We're in a range-bound market. It's frustrating. I get it. And while you hear all the news, the headlines, and so forth, it's very difficult to weed through the fact that we have been in a tight range. It gets frustrating. I understand that. But I want to report what's going on so then we could drill down in the other segments on what's the appropriate strategy, how should we digest all of this news and this price action, and really in the end, how should we be investing our risk capital. Basically, if you take a look at the action today, on the open, the bias basically is to the upside. And the biggest catalyst we can continue to see is the merger and acquisition markets. It's on fire. As a matter of fact, Qualcomm, ticker symbol QCOM, which is up a couple bucks this morning, is going to acquire semiconductor NXP, which ticker symbol NXPI. Both stocks are up on the news. It's about a $47 billion deal. We're seeing some mega deals right now in a lot of different spaces. We saw the one earlier this week with last week and into this week with AT&T and Time Warner. We're seeing some financial consolidation in the brokerage area. We're just seeing a lot of activity right now on the M&A side, and that's been a catalyst for the market right now, which is why we see that the upside today is so prominent in the S&Ps and in the technology sectors. We also saw that both Tesla and Twitter managed to come through with better than expected results. I'm taking a look at the price action. Both of them had third quarter earnings results that were better than expected, especially Twitter, and that really ignited some momentum-based trading in these high beta stocks. And you're going to continue to hear Twitter in the news. They've had a potential failed deal with Salesforce, LinkedIn with Salesforce, all of these different things, LinkedIn then with Microsoft. So you're seeing that Twitter is going to be still on a lot of radar screens, but the earnings did ignite some higher beta stocks along with the underlying in Twitter to pick up, and we're seeing some interest there. Now, in the overseas markets, as I discussed this morning, there's a mixed bag. But the one thing that I want to point out that's going to impact, again, the markets here in the United States is that the UK reported better than expected third quarter GDP, and they're seeing year-over-year growth. That's calmed the Brexit fears that we were reporting on earlier this week. It has the markets now, not only in the UK, but here in the United States, a little bit off red alert if they were going to think that there was some issues with what was going on with the Brexit exit, so to speak. So the early data that we're seeing in here and though in the States is we see another solid initial claims. And we also see a good durable orders number. I'm seeing that come across for September. They were very close to what estimates were. There were some upward revisions from the prior month, but not enough to really spook the market. And I think the claims number and durable orders number have been very solid. That's going to be another catalyst for the bulls. Oil prices picking up about 0.3% at 49.34. Attempting a rebound here. Want to see it get above that $50 level, but we'll see if those selling efforts start to return, especially if we have any further headlines. Now that we have the EIA report that's already been out yesterday, that we saw that there was actually a draw where there was an expectation of a build. Some other earnings that we want to just kind of discuss that are also a catalyst to the upside. We had Bristol Myers come out, Western Digital, so BMY, WDC. I'm looking at Texas Instruments, Ford, Aetna, AET, Raytheon, RTN, and Dow Chemical. They all exceeded their consensus estimates, and this really hasn't hurt the prevailing market tone right now. The upside is where the action is, but the thing that I'm watching very closely that could dampen or damper this move to the upside is long-term rates. I'm taking a look at the 10-year right now. I'm watching it tick by, and I'm looking at the yield right now. The yields are rising. As a matter of fact, they went out right at around 1.8% on the 10-year, and they're currently at 1.82%. And we're also seeing that the European bond markets are moving up and escalating to the upside as far as rate increases. And I've mentioned with the German Bund, yesterday it moved almost 5 basis points. Now, 2 or 3 basis points on the 10-year may not seem a lot, but there are some rising inflation concerns, especially in Europe. And you see that the central banks are really embracing steeper yield curves at this stage. So in other words, you could see that this zero interest rate or low interest rate policies, they're going to start moving off the table because of the concerns with inflation. And you saw also represented in the UK bond markets, the gilt was up about 1.12% right now as I see it go across. And we also want to watch the Japanese bond markets. We're also seeing that their bonds increased by about 2 basis points again. So we're starting to see that not only U.S. bonds, but global bonds are moving. Initial claims, as I said, came in right around 258,000. Again, a catalyst. Durable orders came in, and I'm seeing this come across right around, we're down about 0.1%. So there's some solid numbers coming out, which is giving us a solid estimate on the GDP computations. Coming in, we're up about 0.3% for September. That's somewhat unchanged after August, I believe. Remember, the previously number was right around 0.4%. So right now we have a ton of catalysts to the upside with earnings, mergers and acquisitions. We have bond markets. The yields are moving to the upside. Prices are coming down. That money could potentially be flowing into the securities markets globally, since we're seeing global yields moving to the upside. So we want to keep an eye on that. And we're also going to talk about the strategies at noon in the lunch hour that are trading now. We'll talk about some range-bound opportunities, as well as if we start to get some breakouts, either the upside or downside in specific sectors and the overall market. So that's what we're going to talk about at noon or 1:30 Eastern time. So folks, look forward to talking to you then. Thanks for tuning in. This is Joe Cusick from the Cusick Group. Securities offered through Money Block and a proud contributor here at MarketStream.live. Looking forward to seeing you at 1:30 Eastern time for Strategy Now. Take care and have a great rest of the trading day.